Yeah, traditionally what you see is that when interest rates move down, they stimulate what's called the interest-sensitive parts of the economy. Yeah, typically that's housing. The housing market traditionally is very responsive to low interest rates. Yeah, what low interest rates also do is it actually discourages us to save. They actually encourage us to get out there and spend a bit of money, which is supposed to pump a little bit of money into the economy to drive a little bit of growth, of course. And what we've seen, and people have been paying an awful lot of attention to the borrowing rates, but people haven't been noticing that deposit rates have been going back down on the other side. So 2 to 3 weeks ago, your term deposits, generally speaking, the 1, 2, 3, 4 year space were about 2.5%. Now those rates are down around 2.1, 2.2, 2.3%. So yes, a really great news story here for borrowers, but of course the flip side is that the savers, they're getting a lower return on the other side. Well, lower interest rates, one of the drivers of housing affordability, because obviously makes it an awful lot cheaper to service a loan. But one big caveat here, banks are tightening the availability of credit because interest rates are not the only game in town. The biggest game in town is your ability to service the mortgage, and that's not just about interest rates, it's about having a job. And of course, what we're seeing at the moment is that, jobs are being lost. Jobs are not being created. We're seeing banks also have tightened up some of the lending criteria. So some of the dynamics or factors people used to put into getting a loan approved, having a boarder or two within the house, maybe Airbnb the place for a little bit of peripheral income. And we're seeing the banks starting to take a little bit more of a harder look at some of that income in regard to how reliable it's going to be. But of course, the biggest story here is all about job security. And unfortunately, we're in an environment where the unemployment rate is moving up. Have a look at Fletcher Building. Fletcher Building came out the other day, and unfortunately, 1,500 people are going to lose their jobs. 500 in Australia, about 1,000 in New Zealand. But that's a reflection of how they see the state of the New Zealand economy. It looks like turnover for that organisation is going to go from around 9 billion a year to probably down to 7 to 7.5 billion. If you're taking that sort of a big income hit on one side, of course, you're going to realign your cost structure on the other. And of course, what is a big cost for firms out there at the moment? It's labour. And that's going to have a pretty big negative flow-on effect for other contractors as well, because Fletcher Building's anticipating a big fall in the number of residential building consents, i.e. we're going to build fewer houses, fewer commercial buildings will get off the ground as well. They're expecting a bit of an uptick in infrastructure style investment, but of course, I don't think that's going to be enough to offset the declines in the other two. Air New Zealand, they've been shedding staff as well, and I suspect that's going to continue. But you're seeing a lot of organisations that are stepping back and thinking, well, what's the future going to look like? You sit there, look at the financial services sector, bank branches. We did without bank branches for 5 weeks. What's the future of them going to look like? We'll still have a few around, but I suspect in 5 to 10 years' time, not as many as what we've got today. So I think we're going to see an awful lot of resetting across an awful lot of industries. Of course, it's not one-way traffic. If I have a look at some sectors at the moment, what I thought would take place in regard to moving more to online platforms, embracing technology, the sort of stuff I thought was probably going to take 10 years to get off the ground, I think we're going to do it in the next 1 to 2 years. Some of those sectors are getting absolutely turbocharged. So we are going to see some job creation in other areas, but of course I don't think it's going to be enough to offset the job destruction in others.